In example 3, it's all about purchasing of an asset during the financial year. What I need you to remember is that we only depreciate as we use. It says that Very Mark Trading as Very Tasty Stores started his business on the 1st of March 2021. On this day, he bought a vehicle for 300,000 and equipment for 200,000. He paid by EFT for both items. On the first day, which is the 1st of March 2022 of the second year of trading, Very Tasty Stores will have the following balances in their general ledger. We've got vehicles amounting to 600,000, equipment amounting to 400,000. Accumulated depreciation is 240. That is on vehicles. Accumulated depreciation on equipment will be 175. And now we have the adjustments. So Very Tasty purchased a vehicle worth 150,000 on the 1st of September 2022. And vehicles are depreciated at 20% per annum according to the fixed installment method. Equipment is depreciated at 25% per annum according to the diminishing balance method. Now, let's try and depreciate these ones. Okay, all these assets, which is your vehicle and equipment. I will start with vehicles. Now, with vehicles, you need to be very careful. We've got vehicles that we've had from the beginning of the financial year, which is the 1st of March 2022 up to the 28th of February 2023. Okay, and we've got one vehicle which we purchased right during the year, which was on the 1st of September. Now, this is our financial year. It starts on the 1st of March 2022. It ends on the 28th of February 2023. And we depreciate vehicles according to the cost price method. At the beginning of the year, cost price amounted to 600,000, accumulated depreciation amounted to 240,000, and carrying value of these assets we've had from the beginning of the year will be 360,000. So these assets amounting to 600,000, we have had them for the entire financial year, which is 12 months, and we need to depreciate them at 20%. Now we are depreciating using the cost method. So we'll take the cost at the beginning of the year of these vehicles, which is 600,000, multiplied by 20% and multiply that by 12 over 12. And that'll give us 120,000, which is way less than the carrying value at the beginning of the year. The reason why we calculate the carrying value at the beginning of the year is to ensure that current year depreciation does not exceed that carrying value that we had at the beginning of the year. Otherwise, we will limit this year's depreciation to the carrying value at the beginning of the year minus 1. This is on the vehicles we've had from the beginning of the year. Let us do the vehicle that we purchased during the year, which we purchased on the 1st of September 2022. We cannot depreciate that 150 worth of vehicle for the entire year, whilst we've only used it only for the last part of the financial year, which is from the 1st of September 2022 to the 28th of February 2023. Now, you will notice that we've only used it for 6 months. We'll include September when we count the number of months over which we've used this vehicle. It is September, October, November, December, January, February. That is 6 months. When we depreciate it, we will depreciate it over 6 months. You will take the cost of this asset multiplied by the depreciation rate of 20% and apportion it over 6 months, meaning that you will multiply that by 6 over 12. Please note that the depreciation rate is calculated per annum. That is, per annum means for 12 months. But we did not use this vehicle for 12 months. We only used it for 6 months out of 12 months. So we have to apportion it to 6 months. And this is how we calculate depreciation. For this new vehicle, we do not have to calculate accumulated depreciation at the beginning of the year because it was not there at the beginning of the year. And it doesn't have accumulated depreciation yet. It will only start having accumulated depreciation from the 1st of March 2023, or by the end of 2023, which is the 28th of February. So there's no need here for us to even calculate carrying value of this asset at the beginning of the year. Now, when you calculate depreciation on vehicles, it'll be this 15,000 of the new vehicle plus the 120,000 of the old vehicles, which will give you 135,000 in total. Let's go to equipment. For equipment, we depreciate according to the diminution balance method. As we have done before, you will calculate carrying value of the equipment at the beginning of the year, which is the cost, will be 400,000, and accumulated depreciation of equipment at the beginning of the year is 175,000, and carrying value of equipment at the beginning of the year will be 225,000. We have used this equipment for 12 months. So when we depreciate this, we will take 225,000 multiplied by 25%, multiplied by 12 over 12, that'll give us 56,250, which is way below carrying value at the beginning of the year. So there was no need for us to limit it here. Now, to record the entire depreciation, we will debit depreciation and then credit accumulated depreciation on vehicles, which was the 15,000 plus the 120,000, and that will give you 135,000. Remember, accumulated depreciation, when we recognize it, it is only increased by depreciation. And for vehicles already, accumulated depreciation at the beginning of the year was 240,000. That 240,000 will increase by this 135,000. And accumulated depreciation on equipment will increase by the amount that we just recognized or calculated as depreciation, which was 56,250. Both of those will form part of your depreciation, which is an expense, and depreciation, because it's an expense, it increases on the debit side. When we go to the vehicles account, you will start with the balance. At the beginning of the year, the balance of your vehicle was 600,000. And the balance of equipment at the beginning of the year was 400,000. For vehicle, we purchased the vehicle on the 1st of September, so this will increase the vehicles that we had on the debit side. It was not mentioned how we purchased this vehicle. If we purchased it for cash, it will have been recorded in the CPJ. If we purchase it on credit, it will have been recorded in the CJ. So that's why I wrote bank or creditors control, CPJ or CJ, and the amount is 150. That means our vehicles do not amount to 600,000 anymore. They now amount to 750,000. That 750,000 will represent the balance of vehicles that we have at the end of the year, which will be, I think that should be 28th of February. The balance carried down of 750,000. When we start our new financial year, the balance brought down for vehicles will be that 750,000. Let's move to accumulated depreciation on vehicles. It is made up of the total depreciation for the year, which was it was the 120,000 plus the 15,000. Accumulated depreciation is minus plus, so it increases on the credit side. On the 1st of March, accumulated depreciation on vehicles was 240,000, but it has to increase by current year total depreciation of 135,000. And that will give us our total depreciation or accumulated depreciation, which will start the new year with, and that will be the 375,000 rand. Guys, I'm building right now. I'm building. Watch those videos from the first video to this one. I'm building. And I like one quote from Will Smith where he says that when you build a house, you make sure that the foundation is on point, and as you lay each brick, lay it perfectly well, perfectly well. And before you know it, when you lay each brick perfectly well, at the end, you'll have a beautiful mansion. And right now, that's me laying each brick perfectly well. And just be patient with the process. You will see at the end what you can achieve if you just follow what I'm doing right now. And let's go to accumulated depreciation on equipment. Accumulated depreciation on equipment at the beginning of the year, it was sitting at 175,000 and it increased by 56,250. At the two, it'll give you 231,250. And that'll be the new accumulated depreciation that we will start the new financial year with. Be good? And the nominal, we'll have depreciation. The depreciation account is made up of accumulated depreciation. Now, in this depreciation account, unlike accumulated depreciation, you only record depreciation for the current year, the total depreciation for the current year, which will be accumulated depreciation on vehicles of 135,000 and depreciation on equipment, which was 56,250. And you will normally close this against profit or loss, which is done at the end of the financial year. This is me explaining everything. Now, the depreciation for the year, which is that 135,000 plus 56,250, you will add them up and write them as depreciation under other operating expenses. So your total depreciation for the year will be 191,250. Good. Now, when you record this, please note that the cost of equipment at the beginning of the year, it'll be 400,000. And accumulated depreciation on equipment at the beginning of the year will be 175,000. Now, to get the carrying value at the beginning of the year, you will take 400,000 minus 175,000, and that'll give you 225,000. Under movements, remember movements I said is made up of additions, disposals, and depreciation. All of this must happen in the current year. In the current year, did we buy any equipment? No, we didn't. Did we sell any equipment or get rid of any equipment? No, we didn't. But we recognize depreciation. And if we were to recognize disposals, we were going to use this formula. You simply take the cost price of the equipment that we're selling, you minus the accumulated depreciation of that equipment as at the date of sale. You will learn about that later on. Now, depreciation on equipment for the current financial year amounted to 56,250, which will be your only movement. And at the end of the year, the cost will still remain the same because we did not sell any equipment, we did not buy any equipment. But note that accumulated depreciation, you use this formula. You take accumulated depreciation at the beginning of the year. BOY stands for beginning of year. Accumulated depreciation at the beginning of the year was 175,000. You add current year depreciation of all equipment, which is 56,250. Then you minus accumulated depreciation as at the date of sale of the asset sold, of which we did not sell any equipment in this example. So when you take that 175,000 and you add it with 56,250, it'll give you accumulated depreciation at the end of the year, which will be 231,250. At the end of the year, the carrying value will be 400,000 minus 231,250, and that will give you carrying value at the end of the year, which will be 168,750. You can get this 158,750 by taking this value, which is your carrying value at the beginning of the year, and minus your movements. I haven't confirmed this, so let me just confirm if it is true. If it's not true, then it means I made a mistake somewhere. Let's see. If you take 225,000 and then you minus 56,250, it'll give you 168,750. So it does give you this carrying value here, which is 168,750. That's how you can calculate this 168,750. Let us move to vehicles. Vehicles at the beginning of the year was 600,000. Carrying value obviously will be 600,000 minus 240,000, which will be 360,000. Did we buy any vehicle? The answer to that is yes. We bought a vehicle amounting to 250,000, and current year depreciation was 135,000. Remember that 135,000? You will put it in brackets. Take 150,000 minus 135,000. You will get movements. Under movements, you will have that 15,000. So take 360 added with 15,000. It should give you carrying value at the end of the year. So let's see what I need to expect as carrying value at the end of the year. You're going to add it with 15,000. I hope you understand why this 15,000 is positive. It's because the cost, which is positive, was more than depreciation, which is negative. That's why we have a positive movement of 15,000. Okay, so that's what I expect to get as carrying value at the end of the year. Cost at the end of the year, however, of equipment will be the 600,000 plus 150,000, which will be 750,000, minus accumulated depreciation at the end of the year, which was 240,000 plus 135,000. 240,000 plus 135,000, it should give you 375,000. I just want to confirm all the time, okay? It's 240,000, which is accumulated depreciation at the beginning of the year, plus 135,000, which is current year depreciation. It will give you 375,000. And then you will take 750,000 minus 375,000. It'll give us carrying value of 175,000. I think I have proved it earlier on how you get that. 375,000. So these two amounts, which is the carrying values at the end of the year, what do we do with them? You will take them to the statement of financial position as at the 28th of February 2023. You will write them under non-current assets. So you'll have tangible assets at carrying value. It will be that 168,750. You add it with 375,000. It'll give you that 543,750. Is everything making sense? I'm building here, laying each brick perfectly well. And let me just show you what will this enable you to do. I will start with these papers here. Okay, I will start with, this is 2023 this year. So we had equipment there, but we sold another equipment. We don't know what it is, but we actually sold this equipment here, and then we bought another one there. So this one that we're buying here, you will know how to depreciate it. Right now, you won't know what to do with the one that we sold. You'll have to stick around until the end. This is just me showing you the finished product, but you can answer some of these questions, okay, from what you have learned. And remember, this is grade 10, by the way. Okay, you're learning these things now. And grade 11s and 12, I will recommend that you watch this as well to get the basics, laying each brick perfectly well. Remember that. And here, check our equipment at the beginning of the year. This is 2022 November IEB. Okay, so that, let me show you so that you don't think I'm lying to you. Do you see? There it is, there it is, okay? So we bought the new equipment, but we sold equipment. It's pretty much similar to the other one, actually. So you'll have to determine here the cost of the new equipment, just like the other one. So you'll take that 420 minus this, it should give you that. If it doesn't, the difference is what we bought. This one that we bought, when we depreciate it, because our financial year starts on the 1st of September, we'll depreciate it from February. It'll be February, March, April, May, June, July, August. So we'll depreciate it over 7 months. Okay, this is basically what we're currently busy with. Additions, you will know how to depreciate it. And this is GDE. Obviously, it's last year's as well, November. DBE, actually, I don't know why I'm saying GDE. Okay, where is it now? Here it is, okay. They're giving us vehicles and linen buildings for last year. They don't tell us what equipment was last year, but they're telling us that we bought equipment here, which is an alarm system for that much, right? So this alarm system here, you can actually calculate depreciation for it because we bought it on the 1st of August, all right? And since we bought it on the 1st of August, we are going to depreciate it for how long? What is our financial year? Let me check what our financial year is first. Our financial year, when does it end? It ends in February. And this equipment was purchased in August. So we're going to use it for August, September, because it's the 1st of August. We count the 1st of August. August, September, October, November, December, January, February. So when we depreciate that 48,000, you will take 48,000 and then multiply it. What is our depreciation rate here? Our depreciation rate is 15%, okay? And you will multiply that by 7/12, okay? And then check what it gives you as depreciation. So depreciation on this system will be that 4,200 for the current financial year, which is what we just did, by the way, because we're dealing with additions. I'm showing you how additions, depreciation on additions will be calculated. It's key that you draw your number line. Let me just confirm if this is true. Okay, I'm just giving you guys highlights. I'm showing you as to what we are building towards. Okay, let's hope they asked you guys to calculate depreciation here. I wish I could show you grade 10, 11, just that time is limited. Let's see depreciation on vehicles, which is the new one. You see, you should be able to get those 2 marks by now. This is grade 12. Okay, you should be able to get those 2 marks. That alarm system that we bought. You see, guys. So do not forget what you are learning now. I'm building. Each brick, I'm laying it perfectly well. Don't give up on yourself. Counting is quite easy, but you have to be determined. You have to be willing to work. You have to be willing to sweat. And I always recommend for you to do it for an hour every day, or just check out my video every day as I post. And you can check out a video on tangible assets for 2023 and 2022, just to see, just to get an idea of what to expect. Okay. All right. Let's see if you can be able to answer some of the questions here. Try this one out on your phone. This should be quite easy because there is no additions here. Okay. Give yourself some time and try this out. And this is the solutions. Okay, this is just for classwork 1. You should get it right. All right, you should get it right. Okay. Let me see if I can give you another classwork here. And the tangible assets, the information booklet. All right. So this will be the information booklet. I will drop a link under the description. Check it out so that you can access all of this. So this will be classwork 2 that I want you guys to try out, okay? And let me just show you the answer book. And that is for classwork 2. That is classwork 1. And here's classwork 2, the answer book for classwork 2. Check this out under description. What I did to prepare these notes, I just used past papers, okay? I didn't use any textbook. I just used past papers, obviously, um, from the experience as well of my studies. I just know what to expect. And I just compiled these using past papers. Okay, just check on the description. Check out the link to these handouts. Don't sell them to anybody. Just use them. It's just for personal use, okay? Print them out, and as you watch these videos, complete the handout, all right? And yeah, that is me signing out. I hope you enjoyed the video. Please don't forget to subscribe and like, comment, hit that notification button. All right. Thank you for watching. Khotso.